Good morning and welcome to Indian Open right here on BloombergQuint Live. I'm Neeraj Shah and with me is Devina Khanna. Devina, good morning. We had a day off yesterday, but the news flow around coronavirus, of course, continues to be grim. But lots else happening. There is crude. The world markets are maybe flattish, which is not a bad thing. And we have a long weekend coming up.
Yeah, we do. And not just the news around coronavirus, the new macroeconomic data that's coming out from within India as well as from the US has also been damning. So you had the India manufacturing PMI activity, which was at its lowest record. You had the US jobless claims now climbing 10 million in 2 weeks. And that's really not looking all that great in terms of the market for itself has been quiet over the last 2 days. We missed trade yesterday, but there was no major change or major move across the globe. Today's session sees the US equity futures at least trading under. Dow and S&P both are trading slightly weaker this morning, but they had a good session yesterday, so over 2% apiece for the US equity markets. Asia today is trading more mixed bag. The SGX Nifty yesterday was up about 42 points. We missed that move. Today is down closer to 53 odd points. But aside from that, no major change. So today's session probably, you won't see much of a difference at the time of opening. But the one major variable that saw a big volatile move was crude oil on the back of some comments from Trump saying that he's spoken to Mr. Putin with regards to a supply cut of about 10 to 15 million barrels. The time frame was not specified or what time frame, but they are talking about Russia and Saudi Arabia looking at production cuts. Let's bring in Peter McQuarrie. He's joining us right now to take us through his assessment of this latest development. Thanks very much, Peter, for taking out the time and speaking with us. Let's get in a sense from you as to what you are anticipating out of this comment. And do you think that this is, a possibility that you would see some talks happening between Russia and Saudi Arabia? But the point is they've still not specified the timeline over which they're looking at this 10 million to 15 million barrel cut.
Well, Davina, I mean, it's a long bow. I've never seen a market like it last night. When that announcement came out, it was just incredible. So, you take on board the huge spike to the upside. You look on board as far as what MBS must be thinking, and he's no doubt with President Trump Trump's trying to lobby as hard as possible, frantically, to try and get some participation across that Saudi-Russia number. If 33% of the cut, if they're looking at 10 million barrels, then that really devastates OPEC's production from, that 32, 33 million barrel a day headline number, taking it down to 20. And if they go to 15 million, Davina, I'm not sure what that does to crude.
But just keeping in mind, what we've been talking about with regards to a complete halt of demand, will this 10 to 15 million barrel as and when it comes in be able to counterbalance the demand shock?
Well, a couple of things. First off, the devastation to the market is naturally going to be felt and we're going to see those numbers. We don't see them tonight in those non-farm payroll. We'll see them next month. But, you're looking at those big builds across the world as far as unemployment, people asking for unemployment compensation, and that's really going to impact as far as drivability. We're all doing lockdowns, so the demand destruction is going to be monstrous, and it's hard to put a number there as far as what impact it's going to be to price. But I still believe that the market has got a $16 handle for WTI. It just stares at me. I look at all the technicals, I look at the fundamentals, and I really don't think that, I think we're going to see further push to the downside. I would have thought that the markets may have held at this sort of number if he's coming out with that sort, but there's certainly, I think there's further weakness.
Peter, that was going to be my question. If you've looked at crude for so long, even if there are some supply side measures being done just because of the demand destruction, do you reckon that over the next few months, say 6 months, if you can predict the number as well, great, that oil will largely stay subdued? It may show some flare-ups here and there, but the larger move will be subdued.
Of course it must, Niraj. How can it get above? I really look at it. You've got that huge US dollar strength, and I really think that it's still the worst house on or the best house on the worst street. King dollar is going to remain. I really think that we're going through uncharted territories here, so I don't see a US dollar sell-off. there's the first part. The second part is I can't see how crude can get above $30 a barrel. Really, that's my opinion. That's my, assumptions looking at the market. And that's for Brent as well. So, that's really going to be hemorrhage to the downside as far as, price-wise. And that's going to last for many, many months. Now we're looking at the the US driving season is traditionally that May and June holiday seasons. There's going to be no demand there. So, when you're thinking about what the big picture is, Niraj, there's no sunshine out there for the crude energy markets at the moment.
Yeah, it isn't. And Peter, take a moment to thank you for joining in today and giving us your thoughts. Stay safe, Peter, more importantly.
And likewise to you and Davina, Niraj. Thank you very much. Greetings from Australia.
Yep, you too. Have a good weekend, if it's possible to do that. Actually, it's possible to do that, right? I mean, you're quarantined, but you can have a good weekend. Why not? I mean, there are lots of things that you can do aside of tracking markets. But for now, let's talk about the markets. Get in Siddharth Khemka, Motilal Oswal Johnson right now with his thoughts. Siddharth, good having you. Thanks so much for joining in. Good morning. The chatter around corporate activity certainly inched up with at least the monthly sales data numbers starting to come in. Before we talk about what was the top discussion point in your morning meeting today, Siddharth, can I ask you about how did you assess the auto sales numbers? They were expected to be bad. Most of them have been worse off than what the worst predictions were. What does this mean for the auto stocks?
Yeah, very good morning, Neeraj. Auto sales were expected to be weak, and as you rightly said, they have come off even lower than what we were expecting. And if you look at some of the companies like Tata Motors, they have gone ahead and said that they are not going to report the monthly wholesale numbers going forward. I don't know till when they would continue doing this practice of not reporting numbers, maybe till the slowdown impact gets over. So if you look at the overall auto companies, they were already under a lot of pressure before this lockdown issue even impacted them further. There was a transition from BS4 to BS6, which was to happen from 1st of April, which is now extended by the Supreme Court. But they have given only a few relief in terms of the BS4 old inventory. That's one problem that they were facing. The bigger problem was the overall slowdown in the demand for automotive given the economic growth and stuff like that. Now with the lockdown, the economic growth is likely to get impacted for a longer duration, and we believe these numbers could even worsen going forward, at least for the month of April, when the bulk of the lockdown would happen. And once the lockdown opens, the entire transition would happen from a BS4 to BS6, where the prices of the new vehicles would go up. So that would even deter the pickup in demand, at least in the near term.
Okay. Siddharth, the other variable is crude, right? Showed a bit of a pop, has cooled off as well. Bunch of things happening around there. You've probably seen some ETF moves across the world as well. How do you approach the oil and gas stocks with regard in light of the volatility that we're seeing around crude?
So yeah, very difficult to give a view right now. I was hearing to Peter, who's you just had on your channel. So very pertinent points. Very difficult to give a view right now on oil, given that a lot of developments happening. While the US president saying that there is likely to be a cut of 10 to 15 billion barrels per day. It's yet to reach an agreement. The duration of the same is not yet announced by when that will happen. So a lot of ifs and buts. Looking at the economic growth environment globally, we feel that the crude oil prices are likely to remain subdued for some more time. It's better to stay away from the commodities in these times, be it metals, be it crude, because of the global economic slowdown or a recessionary kind of a economy that is going to be seen going forward. It's better to stay away. There are few companies which one may look at. One of them is Reliance Industries, where we believe the valuations are attractive, given that a lot of the business that they are in, they are market leaders. In the oil and gas business, there is some pressure, but on the other hand, you have the retail and the technology business, which is the Geo, which kind of gives the support. So we believe at these valuations, it looks attractive, although the stock will remain under pressure given the volatility in the crude and as well as the cut in the gas prices that the government has announced. But it's a good time to start accumulating stocks like Reliance.
Okay. Reliance Industry obviously will remain in focus. There are fundraising plans there that the company has laid out for 25,000 crores via NCDs. But lots more stocks to keep in mind aside from these few. Soumit Sarkari is joining us right now to give us a sense of which are the other stocks you need to watch out for as we set up for trade. Good morning. Soumit, good morning.
Good morning, Devina. I'll start off with Aurobindo Pharma because the deal to acquire Sandoz US generic oral solids and dermatology business has been mutually terminated. Now, the decision was taken as approval from the US Federal Trade Commission for the transaction was not obtained within the anticipated timelines. Now, brokerages have remained divided. Now, brokerages like Citi, HSBC, and Credit Suisse have cut their target price on the stock on the deal termination. And while other analysts are saying that the leverage concerns will ease as the deal will not go through now. Secondly, HOL will remain in focus because the HOL GSK consumer merger has been effective, and on April 17th will be the record date for allotment of new shares of HOL. Now, the HOL will also acquire the Horlicks brand of GSK for nearly 3,000 crore rupees, and HOL is expecting a double-digit growth in the GSK portfolio in the medium term by increasing the penetration. Also, GSK will own nearly 5.7% stake in HOL and they have earlier stated their past intention to sell down the stake going forward. Cipla because they have announced a successful completion of phase 3 clinical study of Advair. Now, analysts are expecting the approval and launch for this product to be in financial year 2023 as they are expecting at least one round of queries coming in from FDA, and the expected market size, and they're expecting Cipla to generate nearly 80 to 100 million plus US dollars in annualized sales if it's a 4-player market for this product. RBL Bank, because they came out with a quarterly Q4 updates, and they're saying that in Q4 the bank deposits fell nearly 8% compared to last quarter, largely because of bulk deposits which are removed by state government and corporates. Expecting the Q4 slippages to be lower compared to last quarter. No change in legacy books asset quality. Some increase in slippages in SME and retail segments might be seen because of the lockdown. Moreover, overall, they're expecting a stable quarter-on-quarter operating profit in the fourth quarter of financial year 2020. And lastly, Bharat Forge, GNA Axis, and RK Forgings will also remain in focus because the North American Class 8 truck orders have come down by nearly 48% compared to last month to close to 400 units, and if you see compared to last year, the orders were down nearly 52%.
All right, Soumit, thanks a lot for that. Siddharth, actually want to come to you on a few of these pharma names that are there in the news today. Firstly, split in the middle with regards to the deal call off between Aurobindo and Pharma. One segment believes this is good because in such turbulent times they're saving almost $900 million. The other believes that this going to be a good market. What's your sense on what this does for Aurobindo Pharma? And then Cipla. Cipla has a huge opportunity in front of it since it's successfully completed the clinical study for Advair, which is almost a $3 billion market in the US. So how do you view these two developments on both these stuff?
Yeah, Devina, so if you look at what is happening with Oro, I think this has been a mutual call-off where they are unable to reach approval in the decided timeline. So I think the deal to acquire the Sandoz generic oral solid business has been mutually terminated, and as I said, the decision was taken as the approval from the US Fair Trade Commission for the transaction was not obtained. This could have led to some growth for Oro Pharma, especially in the US markets. However, now that this deal has been called off, definitely it's a big negative for Oro in the current environment where you are looking for avenues for growth. And given the tight regulatory pressure that has been continued, the US FDA may continue to maintaining a strict pressure on a lot of these Indian companies where they are not yet getting approvals for the plant facilities, or they keep on getting some of the observations on these plant visits. I think overall, with this slowdown in the overall economy, some of the pharma companies which are mainly focusing on the developed markets, US, Europe, they could face pressure given the demand could remain tight for some more time.
Yeah, it's an interesting one on Aurobindo simply because a couple of brokerages, I mean, Siddharth, of course, gave his view as well. A couple of other brokerages like Credit Suisse and Citi, I believe, have said that this would be bad. Some others have said that this is great because the leverage concerns get addressed as well. So very difficult to figure out what will happen to Aurobindo. But Aurobindo, Stride, Cipla, all of them are in news in the session today. So lots of companies in the pharma space to monitor. Siddharth, stay on. Much more to talk about. We'd love to talk about what was a top talking point in your morning meeting today as well. But it's also time to focus a bit on the technicals for a bit. Get in Shrikant Chauhan from Kotak to kickstart the proceedings on the charts. Shrikant, good having you. Thanks for joining in. How are you approaching trade today, considering that we might have a start which is flattish, but we have a long weekend coming up?
Yeah, good morning, Neeraj. Yeah,
Good
because
morning.
of this particular long weekend, we are of the view that the markets are going to remain under pressure. And if we see any higher opening, or even if there is a flat opening, then also we are expecting some pressure to come. Yes, below 8,200 we can expect further more weakness. But if there is any higher opening, then close to 8,300, 8,320, certainly we should look for creating some short positions with a stop loss at 8,400. We are of the view that the way the market has formed again lower top, lower bottom series in this particular decline from the levels of 9,000, I think markets are clearly heading for the levels of 7,800, 7,900 in next 1 or 2 days of time. So yes, we are expecting some weakness in banks as well as in Nifty.
Okay, so then would you initiate a short position? I mean, you mentioned the 8,400 stop loss short for the Nifty and the conditions there. Or what about the Nifty Bank? How would you trade that on open?
See, for Bank Nifty also the strategy is similar, and it's a heavily impacted sector. In fact, a lot of stocks have closed below their important support areas on Wednesday. So here also we feel that Bank Nifty is heading for the levels of at least 17,500 to 17,600. And here also the strategy should be to look for creating some short positions with a stop loss at 18,400 on the higher side. Yes, on Wednesday it was around 18,150, 200 levels. So from here we can expect at least 700, 800 points decline in the near term. And for Nifty 7,800, yes, for Nifty the strategy should be to creating short position if we see the stop, if we see the Nifty is breaking the level of 8,200, which was Wednesday's lowest level.
Mm-hmm. Okay. Those are some stock ideas that you need to keep in mind. But just want to also take a look at RBL Bank. Now, they gave an update, a quarter four update, and quite a lot of companies have been doing con calls and giving updates on, what's been happening and what's the impact because of COVID-19. And RBL Bank came out with the Q4 update, record high NIMs that they have clocked in. Aside from that, they've also said that they've seen a deposit degrowth of about 8%. They've fallen 8% quarter on quarter because of some bulk deposits that have been removed from government entities. But both IndianOpen Bank and RBL Bank have also suffered retail setback in terms of retail depositors pulling out money. Q4 slippages for RBL Bank to be lower quarter on quarter due to non-change of the legacy book asset quality. So that for both RBL Bank and IndianOpen Bank right now, this seems to be worse off than what it is for some of the other banks. Do you think that it is possible that both these banks have value post this correction in terms of investing? Because they are coming out and clarifying a lot.
Devina rightly highlighted, both the banks have seen some kind of runoff in the deposits. Appears that specifically few state government entities which have moved all the deposits from private sector banks to some of the public sector banks after the Yes Bank fiasco. So that's one of the pressure in the interim. However, if you look at the banks, especially RBL and IndianOpen, the asset quality issues were to worsen towards the end of the financial year, which they had highlighted earlier. IndianOpen does have exposure to some of the stressed sectors like telecom, which keeps on resurfacing once in a while whenever there is a case or whenever there is this Supreme Court hearing and it gets hammered. RBL, to that extent, we have not yet seen the slippages. Slippages would continue to remain weak in this environment where the SMEs are one of the worst affected of the lockdown. And that is one segment where they were seeing stress, and that stress could go on. Coming to valuation, very difficult to give a view right now because the impact will be something that will happen over the next few quarters. The impact pre the lockdown and the added impact of the lockdown on the SME sector to these specific banks where they are consistently losing market share. So right now I would stay away irrespective of the valuations and would wait for some kind of stability in financials before taking a strong view on them.
Okay. That's RBL Bank there. I believe, Shrikant, you have a few stock ideas as well to watch out for trade. And how long would these calls be typically? Do you feel that they're more positional or maybe a day or two, stay in the trade and then move out?
Yeah, Devin, it's a positional call on RBL Bank to create short positions or to trade short. The reason is because the stock is forming lower top, lower bottom since the stock had started its fall. And on Wednesday also, it has broken its important support area at 130. So we feel that now it is heading for the levels of 10500, which is the next psychological level for it. And based on the current formation, we can keep stop loss at 137 to create short positions, and we can keep this stock trade open for next 2 to 3 days. We are also of the view that LIC Housing Finance is also showing a lot of weakness on daily as well as on monthly charts. And one more time, the stock has broken its important trend line, which was there since last few days. The stock was holding well above the mark of 235, 232. So based on its formation, I think it is heading for the levels of at least 210, 205 in the near term. We can keep stop loss at 240 to create short positions on LIC Housing Finance.
Okay. Shubham Agarwal is also with us. Shubham, good having you. Thanks so much for joining in. Good morning or good evening, depending on which geography you are in. What is your approach to trade today?
Hi, good morning, Neeraj. So it's good morning for me as well because I came back from Canada a few weeks ago before this pandemic took this shape. So today, if we look at the Nifty placement, last Friday, if you remember, we, even though the Nifty was going up, but I was of a very, very clear view that this rally won't hold, and roughly around 9,000 people might have got an opportunity to go short on the index. But today, if you look at the Nifty placement, I'm a bit skeptical on going short unless and until the Nifty breaches 8100, because there is a kind of a wedge that is getting formed, and if that happens, then maybe the current level of 8200 to 8100 might act as a temporary support, and we might see a pullback happening on the overall market. So I think it's a good time to cover some shorts, and maybe selectively some of the names can still be shorted. But I think a long short book is what is the approach, at least that we are adopting for our clients as of now.
Interesting. Bit of a variance in strategy is always welcome, Shubham. So how do you couple that up or juxtapose that with the stock positions that you want to take today?
Yeah, Neeraj. So one long and one short is the strategy for today. So the first short call is on Tata Consumer. And if you look at the very stock-specific behavior, we have seen a decent pullback, but the pullback isn't justified too much with the data that we are seeing in the derivatives front. And in the last trading session, we saw that again the stock started facing some resistance around the 295-300 mark. So we believe that we might see some more downtick coming in there. So Tata Consumer can be sold. Options is not liquid, so we'll go ahead and take a trade in the futures market. We're looking for a target of 248 with a stop loss at 300. And the second call will be a buy call on Bajaj Finance. So this one has corrected quite a bit. But if you look at the placement now, this is quoting around the multiple support areas, and this could be one of the stock which can outperform for at least this pullback that we are expecting on Nifty. So a very low cost strategy, OTM bull call spread is what we are recommending around this level so that the risk remains extremely low. the strategy will be to buy one lot of 2500 call option, which is OTM, and sell one even farther OTM call of 3000. The net spread cost will be at 105 rupees. We're looking for a spread target of 180 with a stop loss at 60.
Okay, remember Bajaj Finance, the little bit of a pressure point that it has been facing. Siddharth, I actually want to come to you on some of these NBFCs now that, we've gone through the fine print of all the announcements and the kind of moratorium that has been given by the RBI. So NBFC is really not getting all that much. Earlier on, there was an anticipation that a part of their liabilities, which was in the form of bank credit or bank loans, would come under moratorium and they would get a leeway, but that's not happening either. The only way that they now will start to get liquidity is if banks look to borrow under the LTRO and then invest in CPs from these NBFCs. So do you feel that is an incremental negative, or not much of an impact is anticipated? And for that matter, the larger ones like HDFC Limited and Bajaj Finance may be able to wither this.
Yeah, Devina, so clearly NBFCs are something that are not getting the benefit of the liquidity measures and the benefit that the RBI has announced. Clearly, they would get impacted. To some extent, they will get the benefit of the liquidity flows from the banks to them. But the challenge continues to remain in the sense of any defaults or any slippages during this lockdown will get reported as NPAs. And that would lead to stress on the financials as well. In this environment, yes, definitely some of the larger ones do become more stronger, gain market share, and have the ability to withstand the current environment. So while HDFC Limited looks much better placed given the business model that they have compared to a Bajaj Finance, where the concerns are of that the loans that they are giving are mostly unsecured. The consumer demand, the consumer lending that they do could remain subdued for some time, and hence the high valuation or the premium valuation that Bajaj Finance was enjoying has come off and may remain subdued until unless we see those 30-40% growth coming back in the financials. So clearly in this environment, one should stay or stick with the leaders, market leaders like the likes of HDFC Limited, which may see the pressure in the interim, as we read in the news some time back that a lot of the home loans they are not repaying, especially in the larger metros. That could bring some pressure in the interim. However, we feel that given the management, strong management, as well as the healthy balance sheet, they will be able to withstand the current environment.
Yep, these NBFCs need to keep a watch out for them as well. Also watch out for the pre-open. SGX Nifty marginally under today's session. End of the week is the truncated week. Next week is going to be an even shorter week of trade. So let's see, what happens as we set up this morning. But Reliance Industries is going to be an interesting watch, because if any movement on the upside needs to happen, you need participation from the heavyweights, and you need the leadership coming from Reliance Industries. And post to them announcing plans to raise funds, whether or not that has led to any sort of. Just a minute left to go on that as well. But a very quick opinion, Shrikant, on Reliance Industries.
The Reliance Industry is outperforming in this particular basket of Nifty 50 since last almost 10-12 days, when the market had started its pullback from the levels of 7,500, and it is still holding above its resistance level or upward levels which the stock has gained in last 3-4 days. So I am of the view that till the stock is not crossing 1150, it is going to remain under pressure or maybe range bound. So let the stock cross its important level of 1150, then only one should look for adding some long positions. If we see the stock is breaking 1040 in spite of this particular news flow, then we can expect weakness in the stock, and in that case we may even see the levels of 960 or 970 on the downside. So we are of the view that the stock is going to consolidate for next few days between the levels of 1150 and 1050 on the downside.
Okay, so wait till it crosses 1150 on the upside for any bigger positional trades on the upside. All right, about a few seconds, and then we get market reopen, and then we also have our Prime Minister Narendra Modi making an address to the nation. So we'll look at that as soon as he starts talking. But there you have it. The first ticks are positive. The Nifty, we're at 8,405. For the Sensex, we're at 28,700. That's about 1.5% apiece for both the indices. Coming down to what's moving, Indus and banks showing you the first tick, which is up 10%. Z is up about 6%. ONGC is up about 6.5%. All right, let's cut across to the Prime Minister.
देशव्यापी लॉकडाउन को आज 9 दिन हो रहे हैं। इस दौरान आप सभी ने जिस प्रकार अनुशासन और सेवा भाव दोनों का परिचय दिया है, वो अभूतपूर्व है। शासन, प्रशासन और जनता जनार्दन ने मिलकर इस स्थिति को अच्छे ढंग से संभालने का भरपूर प्रयास किया है। आपने जिस प्रकार 22 मार्च रविवार के दिन कोरोना के खिलाफ लड़ाई लड़ने वाले हर किसी का धन्यवाद किया, वो भी आज सभी देशों के लिए एक मिसाल बन गया। आज कई देश इसको दोहरा रहे हैं। जनता कर्फ्यू हो, घंटी बजाने, थाली बजाने का कार्यक्रम हो, इन्होंने इस चुनौतीपूर्ण समय में देश को इसकी सामूहिक शक्ति का एहसास कराया। यह भाव प्रकट हुआ कि देश एक होकर कोरोना के खिलाफ लड़ाई लड़ सकता है। अब लॉकडाउन के समय में देश की आप सभी की ये सामूहिकता चरितार्थ होती नजर आ रही है। साथियों, आज जब देश के करोड़ों लोग घरों में हैं, तब किसी को भी लग सकता है कि वो अकेला क्या करेगा। कुछ लोग ये भी सोच रहे होंगे कि इतनी बड़ी लड़ाई को वो अकेले कैसे लड़ पाएंगे। ये प्रश्न भी मन में आते होंगे कि कितने दिन ऐसे और काटने पड़ेंगे। साथियों, ये लॉकडाउन का समय जरूर है। हम अपने अपने घरों में जरूर हैं, लेकिन हम में से कोई अकेला नहीं है। 130 करोड़ देशवासियों की सामूहिक शक्ति हर व्यक्ति के साथ है, हर व्यक्ति का संबल है। समय समय पर देशवासियों की इस सामूहिक शक्ति की विराटता, इसकी भव्यता और इसकी दिव्यता की अनुभूति करना आवश्यक है। साथियों, हमारे यहां माना जाता है कि जनता जनार्दन ईश्वर का ही रूप होती है। इसलिए जब देश इतनी बड़ी लड़ाई लड़ रहा हो, तो ऐसी लड़ाई में बार बार जनता रूपी महाशक्ति का, विराट स्वरूप का साक्षात करते रहना चाहिए। ये साक्षात्कार हमें मनोबल देता है, लक्ष्य देता है और उसकी प्राप्ति के लिए ऊर्जा भी देता है, हमारा मार्ग और अधिक स्पष्ट करता है। साथियों, कोरोना महामारी से फैले अंधकार के बीच हमें निरंतर प्रकाश की ओर जाना है। जो इस कोरोना संकट से सबसे ज्यादा प्रभावित हैं, हमारे गरीब भाई बहन, उन्हें कोरोना संकट से पैदा हुई निराशा से आशा की तरफ ले जाना है। इस कोरोना संकट से जो अंधकार और अनिश्चितता पैदा हुई है, उसे समाप्त करके हमें उजाले और निश्चितता की तरफ बढ़ना है। इस अंधकारमय कोरोना संकट को पराजित करने के लिए हमें प्रकाश के तेज को चारों दिशाओं में फैलाना है। और इसलिए इस संडे 5 अप्रैल को हम सबको मिलकर कोरोना के संकट के अंधकार को चुनौती देनी है, उसे प्रकाश की ताकत का परिचय कराना है। इस 5 अप्रैल को हमें 130 करोड़ देशवासियों की महाशक्ति का जागरण करना है। 130 करोड़ देशवासियों के महासंकल्प को नई ऊंचाइयों पर ले जाना है। 5 अप्रैल रविवार को रात 9 बजे मैं आप सबके 9 मिनट चाहता हूं। ध्यान से सुनिएगा। 5 अप्रैल को रविवार को रात 9 बजे घर की सभी लाइटें बंद करके घर के दरवाजे पर या बालकनी में खड़े रहकर 9 मिनट के लिए मोमबत्ती, दिया, टॉर्च या मोबाइल की फ्लैशलाइट जलाएं। मैं फिर कहूंगा, मोमबत्ती, दिया, टॉर्च या मोबाइल की फ्लैशलाइट 5 अप्रैल को रात को 9 बजे 9 मिनट तक जरूर जलाएं। और उस समय यदि घर की सभी लाइटें बंद करेंगे, चारों तरफ जब हर व्यक्ति एक एक दिया जलाएगा, तब प्रकाश की उस महाशक्ति का एहसास होगा, जिसमें एक ही मकसद से हम सब लड़ रहे हैं, ये उजागर होगा। उस प्रकाश में, उस रोशनी में, उस उजाले में हम अपने मन में ये संकल्प करें कि हम अकेले नहीं हैं। हम अकेले नहीं हैं। कोई भी अकेला नहीं है। 130 करोड़ देशवासी एक ही संकल्प के साथ कृत संकल्प है। साथियों, मेरी एक और प्रार्थना है। इस आयोजन के समय किसी को भी कहीं पर भी इकट्ठा नहीं होना है। रास्तों में, गलियों में या मोहल्लों में नहीं जाना है। अपने घर के दरवाजे, बालकनी से ही इसे करना है। सोशल डिस्टेंसिंग की लक्ष्मण रेखा को कभी भी लांघना नहीं है। सोशल डिस्टेंसिंग को किसी भी हालत में तोड़ना नहीं है। कोरोना की चेन तोड़ने का यही रामबाण इलाज है। इसलिए 5 अप्रैल रविवार को रात 9 बजे कुछ पल अकेले बैठकर मां भारती का स्मरण कीजिए। 130 करोड़ देशवासियों के चेहरों की कल्पना कीजिए। 130 करोड़ देशवासियों की सामूहिकता, इस महाशक्ति का एहसास कीजिए। ये हमें संकट की इस घड़ी से लड़ने की ताकत देगा और जीतने का आत्मविश्वास भी। हमारे यहां कहा गया है, उत्साहो बलवान आर्य, न अस्ति उत्साह परम बलम, स उत्साहस्य लोकेषु न किंचित अपि दुर्लभम। यानी हमारे उत्साह, हमारी स्पिरिट से बढ़कर के दुनिया में कोई फोर्स नहीं होता है। दुनिया में ऐसा कुछ भी नहीं है जो हम इस ताकत से हासिल न कर पाए। आइए साथ आकर, साथ मिलकर कोरोना को हराएं, भारत को विजयी बनाएं। बहुत बहुत धन्यवाद।
All right, that's the Prime Minister Narendra Modi making an appeal to the 130 crore citizens of India. He's also commended the discipline that the Indians have shown in this period of lockdown, but has once again called for us to be united. 5th of April at 9 p.m. in the night, for 9 minutes, has asked everyone to stay at home, switch off their lights, and stand in their balconies with either a candle or a torch or their mobile light. So, one more a 9-minute session where he's called on the unity of India as a whole. But, coming back to the markets, and I think we're just about 3 minutes left to go for market opening. Pre-open rates should have settled by now. And for the Nifty 50, we've got a positive start anticipated. So 8,356 on the Nifty 50. Sensex about 1.3% higher. Well, Reliance Industries there is your biggest mover, 5% higher in pre-open session. Oil and gas as a pocket should be relatively active today. So we've got ONGC also 5% higher, and so is Indian Oil. So that, if you're here, and if you can talk a little bit more about what oil prices do now, and specifically with regards to Reliance Industries, the plans for raising further capital to the tune of 25,000 crores. What's your sense, and do you feel that these are good levels to still enter into Reliance?
Yeah, David, I'm still there. So coming back to the markets on Reliance Industries, see, it's very difficult to predict how the oil prices will behave. But as I said earlier, we expect over the next at least 1 year the oil prices to remain subdued. It is unlikely that the demand will suddenly crop up, and even if the production cut happens from the Saudi or Russia, the demand is something that they will have to look for, which looks elusive for the time. So, however, having said that, we look at Reliance Industries, this sharp fall in the stock price. The core business now implies a 2.5 times FY22 EV/EBITDA, which we believe is very attractive. While the core business, the throughput and the petrochemical sales will get impacted because of the lockdown, as we have seen the demand for both, basically the transportation has been drastically affected. But these are mouth-watering valuations is what we believe. So overall, we believe it's a good price point for investors to get into Reliance Industries. We have a target price about 1,500, which is about 35% upside from current levels.
So that we'll leave it at that. Thanks so much for joining and giving us your perspectives, gentlemen.
Thank you.
We will take in your top calls post market open because we're very, very close to market open. So I won't be able to take it right now, but the markets are showing an uptick in the pre-open sessions. Will be interesting to see what kind of moves do we have in the first 5 minutes, and then maybe take a call from both of our experts, Shubham as well as Srikanth, before we thank them. Here are the first rates on the bourses. this Friday before the markets stay shut for the next 3 days, because we have a long weekend coming up. Remember, Reliance, ONGC and the likes would be the ones that I would very closely monitor for multiple reasons, including oil moving up a bit. So ONGC is your top gainer. By the way, the index first, 0.5% a piece or thereabouts, quickly cooling off as well, because the Nifty Bank has very quickly slipped into the red. In fact, the Sensex too now in the red. So no, very short-lived, if at all, any kind of up move, and the Bank Nifty leading the charge lower. Let me talk about the gainers first though, and then we'll come to the banks. So ONGC and Reliance leading the move, I reckon in part due to crude. Reliance of course has individual news as well, but crude largely the part, which is why GAIL too is up about a couple of percentage points. There is some strength in Bharti Airtel, about 1.3% higher in trade. Indian Oil marginally higher in trade. But look at the banks, they've just fallen off the cliff again today. Kotak Bank is now leading the list of losers after that 9% slam dunk in Wednesday's session, another 5.5% today. IndusInd Bank another 4% today, 326 and counting for that one too. And there is weakness in Tata Motors because the numbers were shocking really, 11,000 units. They're going to stop reporting the monthly sales numbers from next month. And then likes of ICICI Bank and SBI too are down. So yep, the banks clear culprits, 2.3% lower, and large portion of the blame should go to names like ICICI Bank and Kotak Bank. Kotak down 5.7%, ICICI Bank 3%. So not the best news on the large caps. What about the mid caps, Devina?
Let's start first with Aurobindo, which is taking a knock of 10% on the back of the deal with Sandoz falling through. So that one is down to 353. Apart from that, even Strides Pharma is down 5.8 odd percent. Future Retail is down 5%, again lower circuit for that one. You've got the likes of a Future Consumer on lower circuit. Phoenix Mills down 4%. Remember, force majeure being announced, being taken on by PVR. The stock's down about 3.5%. You've got Philip Buildcon, Ujjivan Financial Services, Ashok Leyland posted numbers, auto sales numbers is down again. I want to also take a look at what's happening with the Bharat Forge as well, because you've seen the North America Class 8 truck orders in March down to just 7,400 units. They were down 48% month on month and 52% year on year. So that is another stock to keep an eye out on. The others include the likes of Equitas holding down, Rain Industries down, Hathway down, Indian Hotels down 2.5%, Syngene down about 2%. Amongst the gainers in today's session, just want to run you through them as well. So you've got smaller names that are active, the likes of JP Power, Suprajit Engineering, 5-6% higher. Silpa Medicare is up. Edelweiss has moved to 42, so that's some respite for the stock here. BL is up about 5% odd. Gayatri Projects, Sri Lanka Sugars, Bajaj Hindustan Sugar is active. Dabur, that's once again up 3.5%. Oil India 3% higher. Crompton, Balrampur Chini are some of your gainers as well. And a quick look at what's happening to some of the other names in the mid-cap space, like IRCTC. I just want to pull up that one to get a sense of what that stock's been doing, because after its day in and day out lower circuit moves, the stock finally started to see a little bit of pickup, and after touching lows of closer to 850, the stock recently had crossed about 1,000 odd levels. So that one in pre-open was locked up on upper circuit. You just want to take a look at what's that stock doing. Aside from that, are the others as well, the likes of a Polycab, the likes of an Apple, the likes of an India Mart, Intermesh. So all of these names are the newer ones which saw that traction and then started to peter off. You still have Godrej Properties down 2%, HDC Life down 2% today, Polycab's down about 0.5%, Relax was also down 1%, and SBI Cards at 600 back again.
Just quick opening thoughts from our experts before we thank them. Shrikant Chauhan, opening thoughts, any stock that you would like to trade?
I think say LIC Housing, RBL Bank, both are down. Along with this, we would like to create some more short positions on Bharat Forge, because here also the stock is falling, and it is falling vertically, and whenever it is falling with very good volume. So it shows that a lot of unwinding or maybe liquidation of long positions are happening. So even at this price, 222, 223, it's a sell with a stop loss at 226, and we can expect close to 205, 203 on the downside. So Bharat Forge is a sell. Nifty has already broken its important support area of 8200. So yes, we can expect the levels of 8050 or 8000 in the near term.
We'll let you go on that note, Shrikant. Thanks much for joining in. Shubham, what are your thoughts? You were a bit mixed with maybe positive bias too in certain times, but 1% lower. Is there a trade that you would enact on open?
Yes, Neeraj, if you look at a sectoral behavior, the FMCG kind of a pack is something which is showing strength today. And I think one of the stock within the peers which can be picked is Dabur. And Dabur is at a verge of a breakout, and the way that it is showing some built-ups in the opening session, there's a good probability that we might see a breakout happening in Dabur today. So Dabur is a buy. We're looking for a target of 465 and a stop loss can be maintained at 435.
Okay. Just want to look at Bajaj Auto as well, with regards to the March sales coming 38% lower, 2,10,976 units sold in the month of March for Bajaj Auto. And that one managed to stay up 1 or 2 days ago in today's session. And remember, auto as a pocket is looking extremely weak. Nonetheless, a lot of pain that has been into the system. We'll try and get you management commentaries as well from Maruti through the day, but wait and watch for that. But Shubham, a quick word on Bajaj Auto. That's sub 2,000 now.
Devina, I think auto as a pack, as you rightly said, is quite weak, and the stock is now oscillating within the band of 1800 to roughly 2050. And today there are some positions which is indicating that we might see some follow-up selling in coming there. So my call for Bajaj Auto would be that we can create a short position with a stop loss at 2060, and if we give it a time of 2 to 3 days, roughly 1850 is the target that we are expecting on this.
And Maruti? Shubham?
So Maruti, in fact, has been one of our top short call, and last Friday on your channel, I did give a sell call there. But I believe that it is very close to a support of around 4,050. So if anyone initiated the short call that I gave last week, I think 4,050 is the level where one should look to book profits.
Okay. Well, Shubham, thanks so much for joining in and giving us your perspectives. We'll get in Vetri Subramaniam in just moments from now. But keep in mind, banks are falling thick and fast now because Kotak Bank is down about 7%. And I'll urge my producer to let me know once Vetri Subramaniam is on air. But Kotak Bank is down about 7%. ICICI Bank down about 4.7%. And HDFC is down about 4.3% as well. So banks are clearly looking extremely vulnerable right now. 3.5% lower for the Nifty Bank, 17,574 for that index, and it's not looking pretty at all. Okay, the other thing, Devina, that I would want to ask Vetri is about what's the kind of redemption pressures that mutual funds might start seeing. Hitherto, we've had the support from AMCs because DIs have been buying. They're the last resort really. Nobody else was buying. What if the redemption pressures start coming in for the AMCs, domestic mutual funds, and what happens then? In fact, I think Vetri is here, so maybe let's just put these questions to him. Vetri Subramaniam, thank you so much for taking the time out and speaking to us. Neeraj here, good morning. What's your sense, Vetri? Is it possible to predict if we are done with the damage on the markets as yet?
There's no real forecasting tool that one can use to say that. As I think I've been saying in multiple forums over the past week to 10 days, valuations have certainly reached a fairly attractive zone today. But there's no way to tell whether, we've immediately seen a short-term low or not. But for long-term investors, what's important is that valuations are attractive. Trying to time the bottom, catch it perfectly, great in theory, but, 25 years of being in this market, it can't be done.
It can't be done. So, Vetri, then people would be, I'm just wondering, people would be wondering whether, while we all want to say you can't time the bottom, you try to buy something and it corrects further, it does leave a bit of a sad taste. The question is not the price question, but the time question. Since we don't know how protracted this would be, would it make sense to probably not go and deploy that 33% or 25% right now, but sit on it, let them trend reverse, and then try and go and buy into the quality names, because prices will not run away in a day or two, right?
Again, Neeraj, just looking back at my own experience of these kind of falls, this is not the first time we've seen stock prices fall, 30% in a month. It's happened before as well. There is no template that tells you whether the bottoming will take place in 3 months, 6 months, 18 months. If I just look at the last two instances, 2001, you could actually argue that the bottoming process played out over a period of almost 15 to 16 months. If you think about 2008, 2009, the bottoming process played out over 6 to 8 months. But again, there's no formula that can one bring to this. This is what past history is, but every time might be different. But I think the point you made there is valid, which is to say, nobody is suggesting that you take all your firepower and deploy it in the market instantaneously. But let me just put this in context. Even an investor who was maybe running an asset allocation pattern of, let's say, 50-50 at the beginning of 2020, his equity portfolio is most likely down 30% or more. The debt portfolio has most probably stayed flat or appreciated. So even within the context of that portfolio, you can rebalance to go back to 50-50. And to those who are willing to take on more risk, I think this is the appropriate time to take it because valuations are attractive. 25 years of experience in the market, Neeraj, there's a very simple correlation. Cheap valuations, tremendous amount of uncertainty, costly valuations, everything seems like blue skies and people can see 20 years out. So this is the challenge in investing, but you've got to deal with it. But I'm saying at least you can put your feet into the water and rebalance what has already happened to your portfolio.
All right. So, Vetri, good morning to you. On the back of that rebalancing, would you suggest that somebody who's probably extended themselves at the start of the year and deployed a little more money in equities versus fixed income should now, if they have additional capital, look to balance that disparity and put more money in fixed income so that they align equity and debt?
No, not more money in fixed income because the percentage of fixed income in your portfolio has automatically gone up. So you actually take money out of fixed income and rotate it into equities today to bring your portfolio back to that 50-50 mix. So that's the direction in which you need to reallocate.
Okay. Aside from that, Vetri, now we are obviously at this juncture taking cues from what's happening in the other market. Unless and until things don't start improving there, which obviously looking at comments coming out from the White House, the possibility of cases peaking 2 lakh, this doesn't really augur too well in terms of the investment set. And therefore, emerging market investment comes way down the line. Do you feel that before we don't see anything material coming out from the US, investment decisions into India will have to probably be more staggered than you would have anticipated?
So there are two parts to that, Davina. I think one is, of course, markets are correlated. They've been that way for many years now. But I think those who were there in the markets in 2000, 2001 or 2008, 2009 would again remember that all you got by trying to watch all the news flow and what was happening in other markets was sleepless nights and going completely cross-eyed and bonkers trying to, react to all those data points. So my suggestion is, don't look at that. There will be correlations. This is a hyper market. Remember that, the reason why there is money invested in stocks or other asset classes is because people are parking their surplus cash over there for some long-term objective. Now, when you've got a disruption of the kind that you're having in the economies today, people are liquidating some of their investments to get cash back into their core activities. So when you hear about a sovereign wealth fund which might need to liquidate assets, it's because now there is a call being made from the core. This is normal. But the point being that those who have the ability, who have the wherewithal to make use of this opportunity should do it. And don't try to watch 20 news channels and 24/7 news flow across the world to take that determination. There is only one cycle which eventually matters in terms of your long-term investment outcome, and that's the valuation cycle. And don't lose sight of your asset allocation matrix. I am not by any stretch suggesting that you leverage to invest in the markets. I'm not suggesting that you increase your asset allocation dramatically. Stay within the confines of what you've determined. But most asset allocation models, including the one that we run, are suggesting that this is the time to start raising the allocation if you have the ability and the flexibility.
Vetri, now we've all seen how this particular period has thrown light to the damage that ETFs can do. I mean, at a time when everyone saw the benefits of ETF and the kind of liquidity and the flush of money that came into Indian shores, it's at an equally or even faster pace at which this ETF money has moved out. In light of that, as and when normalcy kicks in, do you anticipate much of the ETF money to be the reason or the leaders to lead the next rally?
Again, Devina, I mean, I don't want to make it sound like a history lesson, but there is always some money which is sort of moving around in and out of the market in a hurry, right? Go back to 2000 and 2001. It was the Badla position which really created the mess. And if you remember history, that is when India finally shut down the Badla system and said we'll move towards the stock futures system. 2008, 2009, it was the hedge funds who were moving money all over the world dramatically. They were the ones who were pulling it out dramatically. This time it's the ETFs. I mean, there's no point looking at the messenger. There is always going to be some player in the market who's more finicky than the others. They drive the upside volatility. They also drive the downside volatility. Sure, ETF flows have gone out, but in 2008, we were worrying about hedge fund flows. Outflows from some players in the market when prices are coming down is not unusual. This is where individual investors and investors who genuinely have the ability and the cash flow ability to stay the distance in terms of investing plans need to show that they can do something differently. So that's really the message that I would convey rather than focus too much on what our ETFs do.
And what about the fact that domestic institutions have been really supportive? So every time you've seen a big FII number, that's almost been matched by an equally large DII purchase.
That's true, and Devina, that goes back to the fact that I think the SIP pipeline has proved to be quite robust so far. I think all of us in the industry have been reaching out to investors to sort of handhold them and encourage them to stay the course. So I do think the ETF flows, the SIP flow is staying the course at this point. I'm also seeing a lot of the ETF money from PFs, etc., staying the course. There will be some investors who have to liquidate, simply as I said, because asset classes are the source of liquidity for those who are facing a challenge in their core business activity, or for that matter in running their households. So some of that is bound to happen, but I think the SIP flow remains encouraging, and that will continue to support the domestic markets to some extent. But again, these things keep changing over time. 25, 26 years of watching FII inflows in the market, the fact remains that except for 3 years, FIs have actually been net positive in Indian markets for 24 out of those 27 years. Whereas if you look at domestic flows, they were very, very irregular till about 2014, and then we've seen a change. So I would hope that the next decade would continue to see domestic flows being robust, but I would not write off the foreign inflows as yet.
All right. The other point being, now that we have seen these erratic moves with regards to fund activity, from a market standpoint, what is the one or two key variables that you will be watching out for? You already spoke about valuations, but anything else that one needs to monitor to figure out whether or not this particular issue is going to form a base? It's starting to form its base. May not be able to call the bottom, but the severity is petering off.
Sure, that's a great question. And, historically, I think what we've seen over time is that typically when you see this kind of a spike in the market, or rather a fall in the market, what actually spikes is volatility. And typically you get to a point where initially volatility tends to remain very high. It still is quite high, but over a period of days, weeks, months, you start to see the market volatility start to peter off quite a bit. That has typically been a good indication of the fact that the market's sort of trying to let's say the more hyper participants have exited the market, and the market is starting to find its feet. I won't necessarily call it bottoming, but certainly a sign sign that the hyper volatile participants have exited, and stocks in a sense are now in the hands of people who are willing to think a little bit more long term. So I think from that point of view, volatility coming down, normally a good signal. The second thing, obviously, from more economy and timeline point of view, we need to get past the lockdown. We need to see how normalcy will come back. Normalcy is not going to be the flip of a switch. It's going to be a gradual process of understanding how we can move back towards some sense of normality that we had in the early part of March. And I think as far as the economy is concerned, the historical indicators which have indicated consumer confidence coming back is the trend in consumer durable purchases and auto purchases. And increase in credit normally means the economy is getting lubrication, and that's again a lead signal that you will start to see economic activity pick up.
Right, Vetri, great to hear those thoughts from you. Thank you so much for joining us this morning on Bloomberg.
Thank you so much.
All right, and with that, the markets are in the red now, actually closer to the lowest point of the day for the indices. 8,130 on the Nifty, that's down 1.5% along with the Sensex, but the Nifty banks were off. That's down 3.25% this morning. With that, we're going to leave it right here on Indian Open. From Neeraj, myself, and the entire team that's together. Thank you so much for watching.
According to a recent report, women today contribute nearly 74% of real estate buying decisions. This includes 32% of single women